Hello, everyone, and welcome to our channel. Today, we are going to talk about a very interesting and important topic: how money works. Money is something that we all use every day, but do we really understand what it is, how it is created, and how it affects our lives? In this video, I will try to answer these questions and more, and hopefully, by the end of this video, you will have a better understanding of the role and function of money in our society. But before we start, let me ask you a question. How much money do you think there is in the world? Take a moment and think about it. How much money do you think there is in the world? Well, the answer may surprise you. According to the Bank for International Settlements, the total amount of money in the world as of April 2023 was about $97,000 billion. That's a lot of money, right? But wait, there's more. The total value of all the financial assets in the world as of April 2023 was about 1.2 quadrillion, 1,200 trillion, $1,200,000 billion. That's even more money, right? But what does that mean? How can there be more money than money? Well, that's because money is not just what you see in your wallet or your bank account. Money is much more than that. Money is anything that can be used as a medium of exchange, a store of value, and a unit of account. And there are different types of money that serve these functions in different ways. So what are these different types of money? And how do they work? Let's find out.
The first type of money that we are going to talk about is fiat money. Fiat money is money that has no intrinsic value but is declared by a government to be legal tender. Fiat money is not backed by any physical commodity, such as gold or silver, but by the trust and confidence of the people who use it. The most common examples of fiat money are coins and banknotes that we use every day. Fiat money has some advantages and disadvantages. The main advantage of fiat money is that it is easy to create and control by the central bank, which is an institution that manages the country's monetary policy and oversees the banking system. The central bank can create or destroy fiat money by using various tools, such as setting interest rates, conducting open market operations, issuing currency notes, etc. The central bank's main objectives are usually to maintain price stability, support economic growth, and ensure financial stability. The main disadvantage of fiat money is that it is vulnerable to inflation and deflation, which are changes in the general level of prices in the economy. Inflation reduces the value of fiat money over time because it means that more fiat money is needed to buy the same amount of goods and services. Deflation increases the value of fiat money over time because it means that less fiat money is needed to buy the same amount of goods and services. Both inflation and deflation can have negative effects on the economy and society. The second type of money that we are going to talk about is commodity money. Commodity money is money that has intrinsic value or can be exchanged for something else of value. Examples of commodity money include gold, silver, salt, cattle, shells, tobacco, etc. Commodity money has been used throughout history as a form of money. Commodity money has some advantages and disadvantages. The main advantage of commodity money is that it is more stable and less prone to inflation than fiat money because it is backed by something tangible and scarce. The main disadvantage of commodity money is that it is bulky, difficult to transport, store, and divide, and subject to fluctuations in supply and demand. The third type of money that we are going to talk about is digital money or cryptocurrency. Digital money or cryptocurrency is money that exists only in digital form and is not controlled by any central authority or intermediary. Examples of digital money or cryptocurrency include Bitcoin, Ethereum, Litecoin, etc. Digital money or cryptocurrency has emerged in the 21st century as a new form of money. Digital money or cryptocurrency has some advantages and disadvantages. The main advantage of digital money or cryptocurrency is that it is more secure, transparent, decentralized, and efficient than traditional money because it uses cryptography and blockchain technology to verify transactions and prevent fraud and corruption. The main disadvantage of digital money or cryptocurrency is that it is volatile, complex, risky, and subject to hacking and regulation. Now that we have seen some examples of different types of money, let us look at the main functions of money in the economy. Money serves three basic functions: medium of exchange, store of value, and unit of account. Medium of exchange. Money acts as a medium of exchange when it is used to buy and sell goods and services in the market. Money facilitates trade and exchange by eliminating the need for barter, which is a system where goods and services are directly exchanged for other goods and services without using money. Barter is inefficient and impractical because it requires a double coincidence of wants, which means that both parties have to agree on the value and quantity of the goods and services they want to exchange. Money makes trade and exchange easier and faster by providing a common and acceptable means of payment for everyone. Store of value. Money acts as a store of value when it can be saved and used in the future. Money allows people to defer consumption and save for future needs or wants. Money also preserves its purchasing power over time if it is not affected by inflation or deflation, which are changes in the general level of prices in the economy. Money makes saving and investing possible and profitable by providing a reliable and convenient way of storing wealth for the future. Unit of account. Money acts as a unit of account when it is used to measure and compare the value of different goods and services in the market. Money provides a common standard or reference point for expressing prices and values. Money also enables economic calculation and accounting, which are essential for making rational decisions and keeping track of transactions. Money makes measurement and comparison easy and accurate by providing a uniform and consistent way of expressing value for everything. As we have seen, money performs three basic functions in the economy that make it indispensable for any modern society. But how is money created and regulated? Who decides how much money there is in circulation? The answer to these questions depends on the type of money we are talking about. For fiat money, the main authority that creates and regulates money is the central bank, which is an institution that manages the country's monetary policy and oversees the banking system. The central bank can create or destroy fiat money by using various tools, such as setting interest rates, conducting open market operations, issuing currency notes, etc. The central bank's main objectives are usually to maintain price stability, support economic growth, and ensure financial stability. For commodity money, the main factor that determines the amount of money in circulation is the availability and production of the commodity itself. For example, if there is a shortage of gold in the market, the supply of gold money will decrease and its value will increase. Conversely, if there is a surplus of gold in the market, the supply of gold money will increase and its value will decrease. The market forces of supply and demand regulate the price and quantity of commodity money. For digital money or cryptocurrency, the main mechanism that creates and regulates money is the algorithm or protocol that governs the network or system that supports the digital currency. For example, Bitcoin is created and regulated by a decentralized network of computers that follow a set of rules called the Bitcoin protocol. The Bitcoin protocol determines how new Bitcoins are generated, how transactions are verified, how the network is secured, etc. The Bitcoin protocol also limits the total number of Bitcoins that can ever be created to 21 million, which makes Bitcoin scarce and deflationary. As we have seen, money is created and regulated by different authorities and mechanisms depending on its type. But how does money circulate in the economy? How does money move from one person to another, from one place to another, from one time to another? The answer to these questions depends on the channels and institutions that facilitate the flow and exchange of money in the economy. The two main channels that enable the circulation of money in the economy are the banking system and the financial markets. The banking system consists of a network of banks and other financial intermediaries that provide various services to individuals, businesses, and governments. The banking system performs two main functions: financial intermediation and money creation. Financial intermediation means that banks act as intermediaries between savers and borrowers by accepting deposits from savers and lending them to borrowers. Money creation means that banks create new money when they make loans by creating deposits in the borrower's account. The banking system also enables the transfer of money between different accounts through various payment systems, such as cash, checks, cards, online banking, mobile banking, etc. The financial markets. The financial markets consist of a set of markets where financial assets are traded. Financial assets are claims to future payments or returns, such as stocks, bonds, derivatives, etc. The financial markets perform two main functions: price discovery and risk management. Price discovery means that financial markets determine the prices of financial assets based on their supply and demand. Risk management means that financial markets allow investors to diversify their portfolios and hedge their risks by buying and selling different types of financial assets. The banking system and the financial markets are interconnected and interdependent. They both influence and are influenced by the monetary policy of the central bank, which affects the interest rates, money supply, and credit conditions in the economy. They both affect and are affected by the fiscal policy of the government, which affects the spending, taxation, borrowing, and debt levels in the economy. They both contribute to and are affected by the economic activity and performance of various sectors and agents in the economy. As we have seen, money circulates in the economy through various channels and institutions that enable its creation, exchange, transfer, storage, measurement, valuation, etc. But how does money influence our lives? How does money affect our behavior, choices, opportunities, well-being, etc.? The answer to these questions depends on how we use money and how we relate to it. Money influences our lives in many ways. Money can have positive or negative effects on our lives depending on how we earn it, spend it, save it, invest it, donate it, etc. Money can also have psychological or emotional effects on our lives depending on how we perceive it, value it, desire it, fear it, etc. Some of the ways that money influences our lives are: money affects our economic well-being. Money enables us to buy goods and services that satisfy our needs and wants. Money also allows us to save for future needs or wants or invest for future returns or income. Money can improve our standard of living, quality of life, economic security, economic freedom, etc. Money affects our social well-being. Money enables us to participate in social activities and interactions that enrich our lives. Money also allows us to contribute to social causes and organizations that benefit others. Money can enhance our social status, social capital, social responsibility, social justice, etc. Money affects our personal well-being. Money enables us to pursue our personal goals and interests that fulfill our lives. Money also allows us to express our personal values and beliefs that define our lives. Money can improve our personal growth, personal happiness, personal identity, personal freedom, etc. These are some of the ways that money influences our lives. However, money is not everything. Money is not the only source of happiness or success. Money is not the only measure of worth or achievement. Money is not the only factor that shapes our lives. Money is a tool, a means, a resource, but not an end in itself. Money can be used for good or evil, for better or worse, for more or less. Money can be a blessing or a curse, depending on how we use it and how we relate to it. Therefore, it is important to have a healthy and balanced relationship with money. It is important to use money wisely and responsibly, to spend it on things that matter and add value to our lives and others' lives, to save it for future needs and wants, to invest it for future returns and income, to donate it for social causes and organizations that benefit others. It is also important to appreciate money and be grateful for what we have, to respect money and be honest about what we earn, to enjoy money and be generous with what we share, to value money and be mindful of what we waste.
This is how money works in our society and in our lives. Money makes the world go round, but you make your life go around. Use money wisely. Live your life happily. I hope you learned something new and interesting from this video. If you did, please give it a thumbs up and leave a comment below. If you want to see more videos like this, please subscribe to my channel and hit the bell icon to get notified of new uploads. Thank you for watching, and I will see you in the next video. Goodbye.